Mortgage rates are at a 20-year high. And even though we have seen some price reductions, the cost to buy a home is high too. This combination of high home prices and high interest rates have not only pushed a lot of buyers to the sidelines, but in some cases, has made the cost to buy a home unaffordable. Today, I'm going to talk about what we can expect moving forward. And I warn you right now, what I'm about to tell you is only for those who can handle the truth. Now, the first thing we need to acknowledge is that anybody who has a vested interest in what happens next has a tendency to project what they hope is going to happen. Let me give you an example. In early 2022, interest rates started to go up and buyers began to pull back, and the number of transactions began to decline. Now, since there had been a buying frenzy when interest rates were low, and that frenzy stopped when the interest rates started to go up, isn't it reasonable to assume that if interest rates came back down, that more buyers would return to the market and we'd see an increase in the number of transactions? Well, in mid-2022, the majority of housing experts, from mortgage brokers to attorneys to realtors, were projecting that rates would settle back into that 4 to 5% range by the end of the year. Now remember, we're not talking about the end of this year, we're talking about the end of last year. Now in hindsight, we know that they were all wrong. But also, in hindsight, we know that they based their forecasts on the assumption that higher rates were only temporary and all you had to do is wait a couple of months and everything was going to return to normal again. But nearly 2 years later, we know that that is not the way things turned out. Let's move on to something that everybody can agree with. In fact, if you can't agree with this, then you really aren't looking for a solution. You're really just looking for a fight. Every single commodity is going to have a demand curve and a price curve that looks something like this. Not exactly like this, but every one of them will have the same general shape. There will be highs and there will be lows, and there will be a period of adjustment between those two extremes. Now, it doesn't matter. Pick any commodity, gas prices, stocks, the cost of lumber, eggs, and yes, even houses. Now, we know that over time, real estate values are going to appreciate. But if you zoom in on that curve, you're going to see peaks and valleys all along that 30, 50, or 100-year timeline. So when we're talking about this current 2-year period, it's really just a very small dot on that longer projected timeline. Now, another thing we'll see on every single demand curve and price curve is that there's a point in time when something happens and the curve begins to move in the opposite direction. In 2008, we can point to the day that Lehman Brothers went out of business. After that, everything began to decline. In the current market, it was back in early 2022 when the Fed started raising interest rates. From that point forward, both demand and prices began to decline. I make these videos so that you can make better decisions when you're buying or selling real estate. But the only way I'll know is if you like them or if you find them useful is if you like a video, comment on it, or subscribe to my channel. Also, if you're thinking about buying or selling real estate here in the Austin area, I would love to help you out. Shoot me a text or an email or schedule a phone call on the YouTube channel page. But enough about that. Let's talk about what's coming next. The first thing we need to do before we can make any kind of meaningful projections is we need to analyze where we are currently at on that curve. If you think we're at or near the bottom, then we could be 100% certain that at some point in time, something is going to happen and everything is going to begin to move in the opposite direction. It very well may be mortgage rates return to 5%. If that were to happen today, we would probably see a very steep increase in buyer demand and prices. Because, like we saw before, when there are more buyers than houses available, prices are going to go up. Now, some people don't think we're at the bottom yet, and they think that there are further price reductions out there on the horizon. Now, that may be true, but I wonder how much of that is your personal projections. If somebody can't qualify for the payment on a $500,000 loan at 7%, if the price came down to $400,000, they might be able to. My opinion is all of this is going to be determined by what the home builders do. We need to recognize that the perceived value of any property is based on what is also available in that same price range. The best example is if you were trying to sell your house in a master plan community where the builder was still building new houses. If you were to list your 3-year-old house for $500,000 and that builder was advertising new houses at $500,000, you're probably not going to sell your house unless you made a price adjustment to make yours more attractive. As an example, if the brand new house was $500,000 and your 3-year-old house was $450,000, then it might make sense for that buyer to consider yours. Now, over the last several years, builders have not only reduced their list prices, but they've also begun to offer promotional interest rates. This is a builder cost which will show up on their P&L. And they do it so that they can keep the prices higher and their gross income will be higher. And they're also able to establish the comparable sales, which will impact future pricing, not only for their houses, but for everybody else's too. Now, your ability to sell your house for what you paid for it 3 years ago might be difficult if that builder reduces their list prices and offers a promotional interest rate. But remember that on a $500,000 loan, the builder is absorbing a $30,000 to $60,000 expense on their P&L. So if you think it's difficult to sell your house for what you paid for it 3 years ago now, imagine what it would be like if that builder was not offering those promotional interest rates, but they are reducing their list prices another 6 to 12%. Now, the final thing I want to talk about is the investor mindset. Even if you're buying a primary residence, part of your analysis, at least should be, to take a look at what projected home values might be in that specific neighborhood in the future. Coming back to that demand and price curve, if we are somewhere here, and we are 100% certain that at some point in the future something is going to happen, that curve is going to move upward, why in the world would someone wait until everybody else starts buying here? Isn't the idea of investing to buy low and sell high? Now, another thing that's going to impact future home values are government policies. And this video shows some of the things that the Austin City Council is trying to do to increase density. And don't forget to subscribe to my channel and ring the bell. That way you'll get a notification every time I post a new video.